Imagine you just saw your dream car at the dealership and you're trying to buy it, or you're trying to get an apartment for the first time, and someone says, "We have to check your credit score."
What the hell is even that?
It feels like a secret number that everyone knows except for you. In this video, I'm going to answer 3 simple questions about credit. What is credit? Why do you need it? And what can you do to increase your credit score? Now, what is credit? Credit is your reputation and how much lenders like banks or loaning departments trust you with their money. A credit score is a visual representation of that reputation, ranging from 300 to 850, 300 being the lowest and 850 being the highest score you can achieve. A term you'll often hear when talking about credit is a FICO score. This is the formula that banks can look at to not have to guess what your credit score is. Let's think of the credit score system like a party. Everyone at this party can lend you money. These are the banks and financial places that will lend you money through credit cards and loans. You go to this party with one of 3 reputations amongst the people there. You can have a good reputation, bad reputation, or no reputation with borrowing money. Let's start with what happens if you have no reputation. No one at the party knows who you are. It's very unlikely that someone will lend you money, but it's not impossible. Everyone starts here with no reputation, or better known in the financial world as having no credit history. Now, if you have bad reputation or bad credit, the people at the party will be less willing to let you borrow money. This usually means that you have late payments or have been flagged as high risk because you have trouble paying back what you've borrowed. Now, if you have a good reputation or good credit, people at the party know who you are, and they're more willing to lend you money and even recommend you to their friends and vouch for you. That's when you get a lot of letters for loans and credit card offers in the mail, but that doesn't mean that you need to accept them. They're just trying to sell you products because you have good credit. They want your business. Now that you know what credit is, let's get into why you need it. Unless you can afford to buy everything with cash like a car or a house, which most people can't put up tens of thousands or hundreds of thousands of dollars for that matter, you're going to need to borrow some money for these big purchases. So if you have bad credit, which is usually around the 580 points or lower, getting a big loan can be really tough. Having a fair score around 600 to 700 can get you into some smaller loans and open the doors to low risk credit card options, but it is still just okay. Now, having a credit score above 720 usually gets you the best deals and the most trust. This means you can get approved for loans based on your credit score. Of course, there are other factors when borrowing money, but credit score is a big one. But let's go back, because everyone starts with no credit history. Let's answer, how do you begin to build that credit score? You first need to open up a credit line, as they call it in the financial world. And a credit line is a product, and in some cases a type of account that allows you to borrow money from it. This can be a credit card or a loan of some sort. Financial institutions and banks will all have different requirements to open up these credit lines. Banks are the most strict and will have the highest requirements, but we usually have the lowest interest rates for loans. Cash lending places, however, will give money to anybody with a pulse, regardless of credit score, but the interest rates will be through the roof. Once you have a credit line, you can start borrowing money. Now, here are a few points that will help you increase your credit score after you have opened up your credit line. Paying back what you borrowed on time, increasing how much you can borrow, or also known as your credit limit, having a credit line for a long period of time, or better known as length of credit history, increasing the number of credit lines or credit mix over time, and using less than 30% of your credit limit. Now, I know that this seems like a lot of information and it can be very overwhelming. So if and when you're first starting out, just focus on paying back the money that you've borrowed on time and using less than 30% of the money that you can borrow, as these 2 categories can impact your credit score very significantly. This will ensure that your credit score increases, and later down the road, you can open up more credit lines, which will in turn increase your credit limit. Now, let's talk about what can hurt your credit score. Let's get the obvious out of the way first. Borrowing money and paying it late or not paying it at all will obviously hurt your credit score. Now for the not so obvious. Number 1, opening up too many credit lines back to back. You don't need to have 6 credit cards in a span of a year. 1 or 2 is okay to start with. Number 2, having too much money borrowed all at once. As I mentioned earlier, you want to keep your total amount borrowed under 30%. If it's higher than that, it'll hurt your score. If you have a credit limit of $1,000, you don't want to exceed $300 borrowed. The more you borrow, the more the lender will think that you absolutely need this debt, rather than just using it as a tool. If you're using $900 out of your $1,000 limit, you're using 90% of your credit limit, and that looks bad on your credit score. Number 3, some things you can't control, which are things like credit history. This will change over time, but one thing you don't want to do is close your oldest credit line. Your credit history will reflect your oldest active credit line. Let's say you open up your first credit card today in 2025. That is now considered your oldest credit line. And let's say you don't open another card until 2028, and you happen to close your 2025 card. Now, your credit history will only register your new 2028 card. However, if you keep both open, your credit history remains at 2025. You want a long history to show lenders that you have been keeping track of your credit for a respectable amount of time. Longer credit history equals more trust. Now for some final comments, if you're under 18, it's very difficult to open a credit line by yourself, but you can ask a parent or a guardian to open up a credit card for you and add you as an authorized user. That way, you can start building your credit before you need it. The worst thing that can happen if you put it off is that when you're ready to move out, get an apartment, get a loan, you don't have a credit history established or your credit's not high enough and you can't get into what you need. But now that you know what credit is, get out there and start building your credit as soon as you can. I know it might not seem super important right now, but when you get to the point where you're ready to buy a house and you've already established your credit, that's one thing you won't have to worry about in the moment. But let me know in the comments what questions you still have about credit. Let me know if I said something that didn't make sense or if I left you even more confused. But don't forget to subscribe if you learned something from this video and to stay up to date for similar videos like this one. Thank you for watching, and I'll see you in the next video.